Now we are started. We're live. So everyone, welcome to Profit Chasers Podcast, PC Podcast, episode 4. Today we're going to be discussing the market cycles. We're going to be discussing real estate and mindset, kind of hit all of them all in one. And those of you who have questions, feel free to direct message me, and we're going to start here. So first thing, like I said, we're going to be discussing hot market and cold market cycles and why it's important to know the difference. Now, this week, in my opinion, was one of the first weeks of the new hot market cycle. Usually these cycles are 3 to 5 months long. Generally, the cold markets are longer than the hot markets. And first question is, what sparks a hot market? Now, what sparks a hot market is simply one sector going ballistic. Now, for example, that was the energy sector. A few weeks ago, we saw the ISPO or INDO run. We saw IMPP run. We saw HUSN run. And I can go on and on and on. And that was the hot market, that was the hot sector that kind of went ballistic, that really sparked the market. Now, what soon led was newer IPO stocks. We're seeing some of these IPO stocks pop off. We're also seeing halts resuming much, much higher. It's a good thing to be stuck in a halt going up finally. I know, it's crazy. Those of you guys are part of the team. That's really where we made all of our money this week, was we got stuck in a halt going up. It resumed 20, 30% higher, and we sold. It was an awesome time this week. It was one of the first weeks I've had all year. Actually, matter of fact, it was the only week I've had all year where every single day was a green day. I think I had 2 red trades total this week. Now, you see this when a market gets hotter. It's easier to trade because, especially my strategy, breakouts are more prominent. Breakouts are often bigger. People are trading more. Retail traders are really piling in on certain stocks. So if you know how to trade, these series of weeks to months often are life-changing gains, or can be life-changing gains. That's why I think it's so important for everyone to understand this. Now, in January and February, it was really, really rough. And I thought March was going to continue to be rough. However, facts don't care about our feelings. The energy sector popped off due to what's happening in Russia and with gas and oil. So we saw the energy sector pop off. And that's a good thing. I'm not mad I have to trade in a cold market, but in a cold market, usually halts aren't as good. Breakouts aren't as good. It's harder to trade. You don't see a lot of these TikTok traders, I'm going to roast myself, flashing massive profits because it's harder to trade. You decrease your position sizing. When you're in a cold market, you need to be decreasing your position size at least in half. Now, this week, I finally upped it. I 2x my position size. I was going in with now anywhere from 2,500 to 10,000 shares of some of these stocks because I want to take advantage of this opportunity. I think what we're going to see in the coming weeks is this same exact momentum. Multiple stocks on our halt scanner. Good gappers every morning. A good opportunity every single day. Stocks are resuming 20 to 30% higher out of the halt. And that's why I was so aggressive on FRGE today. Excuse me. So that's what it is. That's what you do in a hot and a cold market, is you have to understand, okay, when are we in a hot market and when are we in a cold market? Usually it's easily based on how's the small cap market performing? Are stocks, going ballistic? Are we seeing multiple stocks every day up a few 100%? If yes, then odds are we're probably in a hot market. Are you seeing a lot of new influencers and traders flashing profit? Odds are we're in a hot market. I don't know if you guys remember, but last May when the crypto market was going nuts and everyone was getting rich off SafeMoon and all these coins, you would see people like Jason Derulo and some of these people that had no business telling what crypto they're holding. They were making videos about it. That generally means you're in a really hot market, and it generally means it's time to probably pull your money out. So that's kind of one thing I've learned is if you get the feeling of FOMO, if you get the feeling like I'm going to miss out on this life-changing opportunity, odds are the market's going to do a massive, massive correction. That happened to me when Bitcoin was hitting all-time highs. I wanted to add more into it. But the problem was, I had that FOMO. I wanted to buy in. but usually that means that the market's going to correct. So that's what a hot and cold market is. If you have any questions about a hot and cold market, we can talk about that. But it's really, you need to know as a trader and investor what market you're in. I think we're probably going to see this market for probably, I'm no wizard here, but it's usually about 2 to 3 months long. So we probably have a solid few weeks left of this opportunity. The market was only cold for about 2 months, so we're probably going to see about a month or two of awesome stocks to trade. Now, if you're a beginner and you don't understand trading at all, that doesn't mean you should be flying in with full position size, full account size every time we're trading. You shouldn't be doing that. Learn how to trade and then trade accordingly. But that's what it is. And now that kind of leads me into my next question. How do I know, like, for example, if there's 2 really good stocks that are halted or that I'm watching, how do I know when to choose the better one? It's a good question. And really it boils down to what does and I know a lot of you guys are going to think, what the heck, dude? But what does the 6-month chart look like? A lot of you guys didn't think you actually need to pull a penny stock out 6 months of data to see how it is. But that's how I decide what stock I want to trade. For example, yesterday LLL was halted going up, and so was DTRS, whatever it was, DPRS. I don't really know. I have short-term memory loss. But the reason I went with DTRS, and that was the clear winner, because the one I chose went up 40, 50, 60% after it was halted, and the one I decided not to choose ended up going down after it was halted. And really all I did was I pulled it out in the 6-month chart and said, okay, what one looks better? Now, what does a good 6-month chart look like? For DRTS, it was close to its all-time high. It was getting ready to break out and do more of a blue sky setup, meaning it was gonna break its all-time high. It was gonna make higher highs, uncharted territory. That's really what you want to look for. Stocks those are the ones that really start to open up. The ones where it's breaking out of its all-time high. The stock has never traded in this range before. It's just going parabolic. That means that's going to be the stock's initial big move. We see this with, for example, GME went up 1,000% or whatever, and then now you see there's little pumps here and there, 10 or 20% a day. Odds of it getting up to 500 again, minimal, very very minimal, and that's why I choose not to trade those stocks. Former runners. Now, for example, LLL, we profited immensely on it Tuesday off its initial pump, off its initial move, because it was breaking out to all-time highs. And then the day after, the reason why I didn't trade it yesterday and I decided to go with the other one is because it was much lower than its all-time high. It was making lower lows. People were bag holding, in the $6 and $7 range, $8 range. I don't want to trade stocks like that. I'd rather trade the big initial move and not, trade a less quality of a move. You also want to see these said stocks making at least, doesn't have to be higher highs, but it's flatlining, kind of consolidating at a certain level. You don't want to see these stocks, down 100 or not 100%, but 90% from its all-time high 6 months ago. For example, someone asked if I would trade MULN. Someone asked if I'd trade another one. In these stocks, when you pull them out to their 180-day chart, it's down 90+% in 180 days. People are holding positions, in those levels, and they're looking to get out. So that's why I don't invest in or like to trade those stocks that are below the 180-day simple moving average, that are constantly making lower lows and down 90% from its all-time high. I know a lot of you guys are thinking, what happens if we start to see maybe a short squeeze and it pushes back up to all-time highs? Odds are it's not going to happen. I would rather trade a stock that's already close to its all-time highs. So that's kind of my go-to. Yesterday, the DRTS or whatever we traded got halted going up about 50 cents away from its all-time high, a newer IPO'd stock. After it broke, it went ballistic, almost 100% run. That's what we want to look for. That's why it's important when there's multiple stocks running to focus on one. You often never see me. I think there's only been a handful of times in my career where I've been invested in multiple stocks, day trading wise, at the same time. I would advise against it. I would focus on one, master that stock, execute in that trade, and then move on with it. That's why I like to, pick and choose what stocks I want to trade. Good question, though. I really do like that question. Okay, there was another one. He said, could you tell us how to combat being greedy when you're in a green trade? I used to sell too early, but now I'm holding on too long. Please help. Now, the easy answer and the easy fix to this, I should say, is learn to average out of your position. You need to take your partial profit. If you're holding on too long, it means you are not selling you're not selling a portion of your position as it moves higher. If you're not holding on long enough, you're also thinking, I need to get all out at one point. I need to lock in a little profit. Why don't you do this? Sell half your position. Mitigate some of your risk. Lock in some profit. Don't be as emotional because you're not in with your full account. And then let the profits ride. That's what I do. That is the best way to combat that. You can't be a profitable trader buying all in at once and selling all out at another time. I did not start to see exponential gains in my account until I understood the secret of averaging out of my position. You see me do this every single time, guys, every day. If you ever watch me day trade live, I'm usually always doing that, selling out in a green trade, averaging out, selling half here, selling a quarter here. I want to slowly sell out so I can squeeze out the most amount of profit I can in that trade while also mitigating my risk. That's why our win percentage is so stinking high. We're crazy good traders here. Good question, though. I like that one. I need to take a water break quick. Okay. So we're going to kind of slowly start to transition into the more real estate side of things, guys. This is where I'm going to kind of cut up the podcast. You guys are really digging the real estate. I'm really digging teaching it. It's something that I do enjoy. I don't get many questions on the real estate side of things. So Jared or David, one of you guys, can you guys type in the general chat here, just saying we're going to start going over some real estate. Also, I'm going to bring you up, one of you guys or both of you guys, if you guys could. So hopefully your mics are muted, but I'm going to bring you guys up. I'm going to invite you guys up to the stage to kind of talk about what we talked about already. How do I do that again? This is relatively new for me. Oh, invite to speak. There it is.
Hey, Jason.
Yo, what up, man?
What's happening?
Talk about your crazy win streak you're having and what's led to your success, my friend. I know a lot of you guys are seeing this kind of unprecedented win streak, if you will. You see everyone seeing that. What are you, 16 for 17 in your last trades or something like that?
18 out of 19.
18 out of 19 of your last trades. So he's having, if he hits one more green trade, he's going to have a 95% win rate. That is insane. That is, like I said, almost unheard of. So kind of talk about what's led to your success, how you've gotten there, why you think that is, that you have a 95% win percentage, man.
It's a damn good question. I guess it's all luck now. Doing a lot of studying, reading charts, stuff like that. But the biggest thing is what I've changed recently is I'm really focusing on getting the wins. There's been so many times in the past where I started off green and I let it go back to red. Trying to be greedy, just trying to say, well, that's got to turn around sometime, So
Right.
Instead, I've been taking profits on the way up, never letting the green trade go red. Wise man once told me that.
Love it.
And, like all of them, except for there has been one trade where I only made 0.25% of my account, but every other one's been over the daily goal, and most of them have been like 3+.
So you're saying sticking to your strategy really has helped you when it comes to averaging out of your position, and really moving up your stop loss as you start to gain, because even if all the trades were 0.5% gain, that's crazy. But the trades you're taking, you're averaging probably 1 to 2.5%. I'm seeing ones upwards of 10% gain. I'm seeing the threes and the fives. So these are big, substantial gains in your account. And when it comes to studying, what do you mean? Like, what are you studying? You're studying like sectors, companies. Studying your strategy.
Really everything. Watching a lot of news. I'd say the biggest ones that I've gained on have been off of news.
Mm-hmm.
Buying a couple days before earnings reports, kind of riding that up. Just doing the research, and seeing what the projections are, which obviously
Right.
aren't always 100%. But just like, for example, for Neo, a couple days ago, the projections were, everybody was saying it's looking good, but the closer it got to the earnings call, it started kind of saying maybe not. So I had already made like a $2 gain a share. So I was just like, okay, I'll take that.
Which is
Happy
10%,
with
by the
that.
way.
Yeah, exactly. So completely happy with that. So like you said, scaling out of the trades, like I probably bought on Neo, I actually bought twice, and I think I sold like 9 times. So
Oh wow.
yeah, so like constantly scaling out and
Right.
just kind of not really trying to do buying dips, but I have been doing that a little bit lately out of those trades. I'd say more than I did in the past. Just kind of, again, drawing out charts, doing trend lines, looking for wedges, looking for like these consolidation breakouts. Those have been pretty successful for me also. I wish I would have taken the one today on live trading, but I did it on paper just because I was fooling around with it at work and got busy and then forgot to actually go buy it,
Right.
which was stupid, but
Right.
whatever. I'm still doing okay. I'm
Mhm.
happy with my performance over the last few weeks. So,
So, if you don't mind me asking, what's your account look like so far? I
well,
mean, we got 4 days, 3 or 4 business days, trading days left in March. Where's your account headed,
mm,
man?
like, what do you mean? Like percent gain or
Yeah, percent gain.
dollar amount? Oh, I'm not even sure. I'd have to go back and figure everything because I am under PDT, so I do have my capital spread out over
Right.
3 different accounts. So
Right.
I have to like do everything like consolidate it. But I would say I think if I had to guess, I'm somewhere around 18 to 20% on my long term account, which is I use my Robinhood for that,
Yep.
and Thinkorswim probably like somewhere in 7 to 8%, somewhere around there. So
That's
and then
crazy.
for
And what
Mumu,
people?
I haven't
Oh
used much. Yeah, go ahead.
no, you said Mumu. You didn't have as much.
Yeah, so with Mumu account, I only put in 500 to test it out.
Mm.
Excuse me, and I like it, but Thinkorswim's probably still my favorite. I
Yeah.
like that platform the best, but with Mumu, it's been up and down at the five hundred
Got ya.
dollars, so there's not a whole lot in that
Got ya.
account. So
So a lot of you guys beginners might be like 20%, 18%. That doesn't sound like a lot, but it's compounding. So
right,
it's 1% on top of 1.1% on top of you guys. You guys understand. So
yeah, easily over $1,800 swing, easy.
which is crazy, because if you think about two things. One, as a day trader, you want to outperform the market. If you're not outperforming the market or the S&P 500, you shouldn't be day trading. But if you look at the S&P 500 and the gains it's made this month from the start of March, I'm not taking the low, from the start of March to now. Let me get my percent gain tool. The S&P 500 has made a 3% gain. So if he made a 21% gain, he's 7x'd his profit, at least by trading. That's awesome.
Damn,
That's what we do here. So
yeah, when you say it like that,
and the crazy part about it is, S&P 500 at the beginning of the month took about a 7% correction. So at one point he was up 50. He was up an infinite amount more than the market was, because the market was down. Now that's how I analyze how I'm doing as a trader. How am I performing compared to the overall market? Because if I'm barely outperforming the market, is it worth my time? Should I rather with time is extremely, extremely valuable. You can't even put a price to it. But am I wasting my time sitting here dilly-dallying if I can't even outperform the S&P 500? That's something you guys want to kind of ask yourself. Now, if you're just beginning, even if you're just even if you're 2 years into it and you're not doing it, really give yourself time to understand and learn the process. But that's how I kind of analyze how I am as a trader. Now, that's kind of the last thing I wanted to talk about for trading. I thought it was really cool. Like, that's got to be one of the best win streaks ever. Now, one thing I don't want to do is I don't want to hype it up to where like you feel terrible if you have a red day, but
yeah.
Actually,
there has been a couple trades where I'm just like, man, like I'm afraid to break the streak, which is kind of made me not want to get into something. But anyway, I did. But I'd be remiss not to shout out, you, number one, like AK Mike, Capone, you guys are all calling out good stuff for us. So,
right.
I mean, I've just been concentrating more on the stuff that does have the momentum. Mm-hmm. If that candle is shooting straight up, I'm getting in it.
Right. Now,
I'm not afraid to take profits. So,
you said you don't want to ruin the streak, so you're being careful in what you're trading. Would you say your success has led to, or is a big part of, you're being selective? You're being selective in what you're investing in.
So being selective is definitely relative to making good trades, for sure.
Right. Awesome.
Yeah.
I love that. So, guys under PDT, I'm pointing you guys out. Be more selective. You guys are 100%. Seeing the percent gain I'm making my small account. Now, I started a small account around my birthday, December 7th. Write that in your journal and give me a present. I'm just kidding. But I'm up almost 400% from starting this challenge in four months. That is insane. But the reason I'm up that much is because I'm being hyper selective. For example, I think I took 2 or 3 trades all of February. I was being extremely, extremely selective. That's how you need to be as a trader, especially under PDT, because you guys only have a limited amount of shares. You need to assess every trade before entering. What is the probability of this going good? Now, obviously, it's not going to have a clear number like, oh, it's going to have an 85% chance of me winning, but you have to understand, what does the setup really look like? Is that a high probability setup? Is that a good pre-market chart? Is there, a lot of wicks that might, set your stop loss? You have to analyze the trade before you get into it, come up with a game plan, and be more selective. And that's the real secret on how to exponentially build your small account. Be selective. I know it sounds crazy, but trade less, profit more. I think I took probably less than 10, I'm probably pushing less than 10 trades this week. And it was one of the best weeks I've had as a day trader, because I'm taking one home run trade after one home run trade after one home run trade. That's just, my strategy. I need to, only have one massive winner. You don't see me do base hit here, base hit there. I'm selective. I'm patient. I have a hunting background. I did a lot of hunting as a kid. I still love to hunt. It's kind of the same concept. There's going to be days where you're going to show up and you're not going to see anything that you like. That's okay. That happens. There was a week in February I think I took 2 trades the entire week. Be selective. So that's the last thing I'm going to say on trading, because I'm telling you, like David said, I know he had 20 trades, but that's across 3 different accounts. So he could have taken a whole lot more, but that's a mix of day trading and swing trading.
Correct, yeah.
So
majority of day trades, but definitely some swings mixed in there.
Majority day trades. Okay.
Yeah.
And
I use them. They're precious. I use them.
I know you're like you have a lot kind of going on. Yeah. Are most of the trades executed on your phone? If I can ask.
I would say probably only like maybe 30%, 7 out of 10 would be at my desk. Hope my boss never listens to this, but yeah, we do a lot of typing. So, every interview that we do, we have to sit down and type verbatim. Okay. So it's like half and half what I do for my job at this moment. So yeah, there's a lot of time at the desk, and it's always running in the background, let's just say.
Right. Okay, nice. That's good. So that's one last thing I kind of wanted to dabble on is day trading on the phone. Is it feasible? I have a whole video that I filmed on this, and it is extremely hard, especially what we're doing. We're momentum day trading. It's hard to get in and out of stocks already. people are finding when they are at their desk with fast, high-speed internet with 4 to 10 screens, it's hard. On the phone, even harder.
Yeah.
So,
Main thing on the phone, like especially, it's just it's so much faster to use a keyboard and a mouse than trying to put in everything on the phone. And there's
right.
been several times where I've like tried to put in a limit order on the phone, but then the price goes above it or something, and I didn't get in on it. So
Yeah.
yeah, definitely on the phone is much harder.
Yeah. Yep. Um, so before we kind of move on, I think we're touching on some really, really good points on trading. Is there anything else we can move on or talk about trading wise before we talk more real estate side of things? Because that's my forte, stocks. I enjoy it. Now, some things to look forward to, guys, is we're coming out with a book here soon. We're about 20 pages deep. It's not a super extensive book. We're coming out with 2 books. One's going to be a picture book spelling out our strategy. So I've gone in the archives and like sifted through like 20, 30, 50 different stocks I've traded and analyzed the setup. And what I'm doing is I'm finding past examples, and we're trying to kind of formulate a book on my strategy around it. So I can't wait to kind of release that. Now, Kevin, the one thing he doesn't want to talk about is FOMO. And this is the last thing we'll talk about on trading, but FOMO is kind of like an every area of life type deal. If you, and I already touched on it in the beginning of the podcast, if you're feeling FOMO, odds are you're too late. Wait for a correction, or don't trade it at all. For example, I felt some FOMO in last May when all these small cap cryptos were popping off, and SafeMoon was up thousands of percent. We saw all these other ones. Yeah, I made a good gain on some of them. One being noted, the 1,400% gain I made on that one small cap crypto. But if you're already having the feeling of FOMO in a day trade, even like, man, the stock's already halted going up, should I chase it? Usually like 85-90% of the time you're too late. You should wait for proper entry. Don't chase it. There's going to be more opportunities, especially in this hot market. Don't think that that's going to be the only life-changing stock trade you're going to be able to take. Those of you guys under PDT, you're limited to 3-day trades anyways. So yes, you might have missed out on a good opportunity, like today on the stock we traded, FGRE. If you didn't enter properly, just admit that you missed it. It's okay. There's going to be another opportunity next day. So just kind of have a next day mindset when it comes to having FOMO, I'd say.